All right, starting over now. What is the expected move in VIX going out to April 17th? And again, it's a bit of a trick question. Okay, 2.5, 250. $277. Okay. And how are you guys coming up with that? And this is kind of it's not meant to be a trick. It's this is the point that I want to, really hit home here. Which straddle are you looking at, Todd? Okay. So that is what we would look at, right? Normally, because that's where VIX is trading right now. Right? 1339. So, in our normal calculation, that's what we would look at. However, VIX individual options, depending on the expiration, are not based off of this spot VIX number of 1340 right now. It is based off of the VIX future. Excuse me. I'm gonna refresh the screen here, guys. Hang on. All right, now we're back. Now you should be able to see VIX on the screen, I'm hoping. Cool. So, VIX option pricing, depending on the expiration, is not based off of the spot or current VIX. It's based off of the correlating future to that expiration. Okay, think of it. It's based off of the current or the correlating VIX future to that expiration. So, the easy way to see that the April 17th options are not being calculated off of this 1343 VIX number would be to look at the at-the-money straddle. Okay, the at-the-money straddle here, if we look at 1340, so if we go to the 13.5 straddle, the calls and the puts should be about equal, right? Right, when we look at straddles, at-the-money straddles, unless there's a dividend, the calls and the puts are always just about equal, right? Well, if we look at that 13.5 straddle right now, out April 17th, the calls are 232, the puts are 40 cents. Everybody see that? So that means that these options here for April 17th are not being based off of VIX trading 13.5. So what do? Well, the easiest way is to just look which straddle are the calls and the puts equal. And that will give you a reference as to the VIX future that's trading. Okay, so if I look at the strikes here in April, as I get up to 15, we're getting closer to being equal. We're 155 on the call and 115 on the put. If I go up to 16, it flip-flops. It's almost the same disparity, but just the put is now more expensive than the call. So what that tells me is that the April future for VIX, is trading somewhere between 15 and 16. Most likely right around 15 and a half. Because if I take the 15 put, which is trading $1.15, that is just about equal to the 16 call. Which tells me that the VIX future for April 17th is trading right in the middle there of those two strikes. So roughly 15 and a half. Does that make sense? Okay, now, if 15 and a half is the at the money, if that's where it's trading, then that is where I have to look to see what the expected move is. Does that make sense? Okay, so if we look at this and say, okay, the 15 put, the 16 call is trading about $2.35, $2.40, right? Everybody see that? Okay, then our expected move, that is the expected move, about $2.35, but it's from a starting point of roughly 15 and a half. So our expected range would now be 13 and let's call it, 13, let's just call it, I'm rounding off, up to 18. 13 to 18 for the April 17th VIX options. Does that make sense to everybody? Okay, so now if we're looking for an upside play in VIX and we want to choose these options, 18 would really be our target. So we can look at, let's say, even just the 16-18 spread if we want, and that's trading right at about 45, 50 cents. Great. That's reward to risk we would look at. All right, so those are kind of the strikes I'm looking at. That's not a bad reward to risk. Let's see if we go to the 15-18, widen it out a little bit. The 15-18, $3 wide. I would definitely pay 75 cents for that because 75 cents would give me 3-to-1 reward to risk. Now, we're not going to be able to get this for 75 cents right now, but where would VIX have to be? What would have to happen to VIX for us to get this spread for 75 cents? Opposite, Todd. And actually not a full dollar. VIX would need to come down, so our call spread would come down also. Right? Does that make sense? If we want to pay less for our call spread, then the stock, or in this case, the VIX, would have to come down. But not by $1. This has a 26 delta to it. If VIX went down another $1, then the value of this would go down to about 55 cents or so. We're only looking to maybe, get another 5 or 7 cents out of it. So yeah, about 30 cents, 25 cents, somewhere in that range, David, Paul, yep. So if we wanted to buy this for 75 cents, okay, we theoretically would look at that being valid with this VIX, this spot VIX, because we can't base it off of the April future right now. This is what we're basing it off of. We would want to do this, or probably be able to do this, 13 and a quarter-ish or higher. And 13.25 is the low on the day. I don't know that we're going to get down there again, but I'd be willing to put that out there to buy this for 75 cents with VIX trading 13 and a quarter or higher. Does everybody get that? Okay. Then I think we have ourselves a signal that I'm going to put out. Any questions? All right. Let me get the video posted up in the room, get the signal out. I'll be right back.